Hey guys, Reese here and welcome back to the channel. So as being a real estate agent and a real estate investor myself here in Columbus, Ohio, knowing a thing or two about loans, specifically home loans, and the best way to get approved with the best terms kind of comes with the business, as educating clients is a very important part of the job. I surround myself with some of the best lenders in Columbus, and nurturing those relationships and making sure I'm up to date on who's the best person to apply with, who will get a loan closed, who will get the best interest rate, is an important part of that business. See, many people who are buying their first home, second home, maybe their first investment property, they're not out here purchasing these properties with cash. And so having all the puzzle pieces put together for getting a home loan and getting the best interest rate is a super important part of this process. And so in today's video, we're going to talk about where to even begin with getting yourself a home loan, how to make yourself more appealing to banks so that they want to lend to you and give you good terms, good interest rates. And we're going to talk about the general timeline and the general process of how to get a home or investment loan. So guys, before we dive in today, go ahead and like this video and subscribe to the channel if you're new. And as we work through this process here and talk about applying and qualifying for a home loan, go ahead and drop questions down below if you have any, and I will make sure to answer them so you guys have the best chance of getting approved for a home loan with a great interest rate. So have you guys started working with a real estate agent and you make this new connection with a real estate agent, maybe somebody a friend recommended, and after they get all the criteria for searching for a home, the first thing they ask you after that is, are you pre-approved yet? And sometimes this can be a little frustrating for a new home buyer because they're thinking to themselves, no, I'm really just starting my search, right? I don't even want to think about that yet. Let me look at some houses. Let's see what's out there and let's see what I like. It can feel like maybe that real estate agent is pressuring you a little bit to get pre-approved, or they're trying to hurry you along through the process. Well, the reason many real estate agents ask this pretty much right off the bat is because many people don't actually understand how you qualify for a home loan, or how maybe certain debts they have or their credit score affects the price they can actually qualify for a home and their monthly payment. And so getting pre-approved right off the bat helps a real estate agent really define their criteria, make sure you guys are qualified, and if not qualified, gives you time to work on the things that you need to work on before you find that home. And so really the first step in getting a home loan and getting that pre-approval started is finding a great real estate agent to connect you with good lenders in your area and to get that pre-approval. A pre-approval is kind of required to even submit offers to sellers. You can submit an offer without one. However, most sellers won't accept an offer unless they see that you have proof of funds or a bank stating that, hey, this person can actually qualify for this loan. Now, this pre-approval will tell those sellers, yes, this person can afford this home. Yes, they will most likely be approved for the loan to purchase this property. And that pre-approval looks at 4 things in order to qualify you for that purchase. It's going to look at 1, your credit score. Second, it's going to look at your job history. Third, it's going to look at your debt to income ratio. And fourth, it's going to look at, do you have enough money in the bank to actually afford the down payment for this purchase? And once again, the reason why you want to start this pre-approval step as early as possible in the process is because a lender can tell you, hey, your credit score is a little low. That's going to affect your interest rate. You're going to have a higher interest rate. Let's maybe spend the next month or 2 increasing your credit score so that way you can lower your interest rate. If you just get a pre-approval the day before you write an offer, you're not going to have any time to fix the things that might be affecting your loan. So first off, let's talk about credit score. Realistically, you need a 580 credit score or higher in order to qualify for a home loan. There are programs like FHA or VA that actually accept a lower credit score, but a lot of times the lenders that actually underwrite these loans are not going to accept a lower credit score. Now, if you get up to a 740 or above, that's going to be your best interest rate. Above 740, it's not really going to benefit you at all anymore. And so your goal should be to get as high as possible to reduce your interest rate on the loan. When you think you might be ready to start looking for a home, or maybe within the next 6 months or so, I think it's important to go ahead and check your credit before you even apply for a pre-approval by going to one of the free websites online like Credit Karma and checking to see what your credit is, as that is such an important part and that greatly affects the interest you pay on your loan and how much your monthly payment is. Ideally, you should be above a 620 credit score before you start shopping around for loans, because 620 is the minimum for a conventional loan, and a conventional loan is going to be much better for making offers, as FHA and VA are much less competitive in today's market. Now, if your credit score is on the lower end, go ahead and check out my video on how to increase your credit in 30 days. I made it a while back. Great video, has some good tips on really boosting your credit up relatively quickly, and so that way you won't hold back your home search for too long. Now, in addition to credit score, next they'll look at job history, and how you make your money is extremely important as well. Now, whether you're salaried with a W-2 or you're self-employed, maybe getting a 1099 income, you need 2 years of work history in order to qualify for a loan. Now, the cool thing is, with a W-2, if you say went to school to become a computer engineer and then you got a computer engineering job, the bank will look at those 4 years of college and count that as job history. And so you can actually buy a home fresh out of school with no work history, just having schooling. However, if you're 1099 self-employed, you will need 2 years of tax returns with your income on those tax returns. And the lender will go ahead and average out the past 2 years. So if you made $50,000 year one and $100,000 year two, the bank will see $75,000 of qualified income on your tax returns. So keep this in mind, because this is something that catches a lot of people off guard. Is they are maybe a contractor, they get 1099s, and they've only been working for 1 year, but they make great income. They're making $100,000 a year, but they only have 1 year of job history, and that's not going to cut it when applying for a loan. Next, your debt to income ratio. This takes into consideration your gross income as well as all your monthly payments on, say, recurring debt or long-term debt. If you have a debt to income ratio lower than 50%, you're in a great place. You could have up to 57% with FHA. However, you could have up to 57% with FHA or 60% with VA. However, I recommend you try to get closer to that 50% or less, as the monthly payment will just be a lot compared to your income. See, a 50% DTI means half of your monthly income is going towards debt. So let's go ahead and find your DTI. We're going to take your monthly gross income and also add up all your monthly debt payments on any long-term debt. Say you make $5,000 a month and you add up all your debt payments for, say, your car loan, your credit cards, student loans, maybe child support, things like that, and those payments total $1,500 a month. Well, a 50% DTI would be $2,500 a month, or 50% of that $5,000 a month salary. And so if you subtract that $1,500 in debt payments you already have off of that $2,500, you have another $1,000 available that your PITI, your principal, interest, taxes, and insurance, to go up to, and you'll still qualify for the loan. If you got a loan that had a payment of, say, $1,500 a month, that would put you over your 50% DTI and you would not qualify for that property. Now, if you want a more expensive home, however, your DTI is too high, you could put down a higher down payment to reduce the loan on that property. Now, speaking of down payment, that brings us to the last thing you need to be aware of when applying for a home loan, and that is your cash in the bank that'll be used for that down payment. Now, that cash also needs to have seasoned in your bank account for 60 days. That means if you have $5,000 in cash sitting underneath your mattress and you want to buy a home, so you go ahead and deposit that $5,000, that needs to sit in your bank account for 60 days before it can be used as part of your down payment funds. And so in all reality, that money would just sit there and not qualify for that purchase. So guys, that's it. Applying and qualifying for a home loan is not that complicated, but there are a few things you need to pay attention to and be aware of as you go through the process. Work with a respected real estate agent in your area, have them connect you with 2 or 3 of their lenders, and chat with all of them. A great lender will help you get qualified for a home loan even if you don't currently qualify. Say 1 or 2 of those 4 items are no good, the lender will help you fix those items to be able to qualify or tell you how to fix them moving forward. Of course, if you're looking to buy in the Columbus area, I'd love to help you out. So leave a comment down below. And guys, go ahead and like and subscribe if this was helpful today. I really appreciate you guys watching to the end here. So guys, have a great day, and I'll see you in the next one. Bye.